All right, let's get right into it. Today, we're cracking a code. We're going to dive into the world of those fast-paced financial live streams and turn all that confusing jargon you hear into something that actually makes sense. So you're scrolling, you tune into one of these streams, and you hear something like this. It feels like you've just walked into some secret club, but you don't know the password, right? You can feel the energy, you see all the numbers flashing on the screen, but the language, it's a total mystery.
And hey, if your head is spinning right now, don't worry, you're not alone. That's totally normal. You haven't missed the memo, you've just found the starting point, and in this breakdown, we're basically going to hand you the decoder ring to unlock it all. Okay, so let's strip away all the crazy charts and the jargon for just a second. When you get right down to it, all of this high-speed trading really starts with one super simple prediction about where things are headed.
Here's the most important thing to get. There are really only two bets on the table. When a streamer says they're going long or zodo, all they're doing is betting that the price of something is going to go up. It's literally like betting on your favorite team to win the game. And on the flip side, going short or zokeng means they're betting the price is going to go down. They're betting against it. Up or down. That's it. That's the entire game. So how do these traders turn what look like tiny little price wiggles into these huge results? Well, they use this incredibly powerful and incredibly risky tool called leverage. Think of it like a giant amplifier for their bets. It can make their wins massive, but it can also magnify their losses in the blink of an eye. Basically, what the slide says is that leverage is using borrowed money to control a way bigger position than you could ever afford with your own cash. And that's why we call it a double-edged sword. You have to understand that it cuts both ways, big time.
Okay, let's make this super real. Imagine a trader starts with just $100 and they decide to use 50x leverage, a number you hear thrown around all the time on these streams. Let's see what actually happens. So, you start with your own money, 100 units. But then you hit it with 50x leverage and bam, that $100 now controls a position worth 5,000. You can see the appeal, right? But watch what happens next. Now here's the crazy part. If the market moves in your favor by just 2%, a tiny fluctuation, your profit on that 5,000 position is $100. For your original stake, that is a 100% return. You literally just doubled your money on a tiny 2% move. But here's the other edge of that sword, and it is brutal. That exact same 2% move, but in the wrong direction, also means a 100 loss. And since your entire stake was only 100, you're done. Wiped out. This is what streamers call a baksal. Your position gets liquidated and your money is gone. Just like that.
So if a tiny 2% move can cause all that drama, what's making these prices swing around so wildly in the first place? Well, it's not just random. It's often driven by really human things, news, major events, and just the collective mood of everyone playing the game. Streamers have a term for this, the Shalsi man, which you can think of as the news front. This is basically everything happening out there in the world. Political stuff, economic reports, global conflicts, anything that can influence how investors feel. And those feelings, whether it's fear or greed, are what make people move their money, and that's what moves prices.
So, for instance, the streamers we were listening to were breaking down a huge drop in the price of gold. And the logic went like this. Rumors of peace talks started to spread. That made people less afraid of global instability. Now, gold is seen as a safe haven, something you buy when you're scared. So less fear meant less demand for gold. Investors started selling it off to buy riskier things, and that flood of selling just caused the price to plummet. It's a straight line from a news headline to the chart on your screen.
But sometimes there's no big trend. The market just gets stuck. Streamers call this a jindang hangqing, or a ranging market. The price isn't really going up or down, it's just bouncing between a high point and a low point, kind of like a ping pong ball trapped in a box. In a market like this, the whole strategy has to change. All right, so knowing how news can cause these insane swings and how markets can get stuck in that ping pong mode, how do experienced traders actually deal with all this chaos? Well, according to our source material, they follow a few key strategies, especially for regular people. Let's take a look at their playbook. They really boil it down to 3 core rules for trying to survive out there. Think short term, protect yourself from disaster, and understand who you're really playing against. So the first strategy, especially in that choppy ping pong market, is to eat and run. Don't try to hit a home run. The whole point is to grab a small, quick profit and then get out. Because if you get greedy and hang around too long, the price is just as likely to swing back the other way and completely erase your win. You lock it in and you move on.
The second one is maybe the most crucial piece of advice. Use a stop loss. This is your emergency brake. It's an order you set up ahead of time to automatically sell your position if the price drops to a certain point. Yeah, it means you lock in a small loss, but it is the single best way to stop that small loss from becoming that 100% wipeout we talked about earlier. It is the seatbelt for your account.
And finally, this is a big warning they give. Don't just blindly copy the big players, the ones they call Juwei or whales. We're talking about massive funds with millions, even billions of dollars. Their goals, their risks, their strategies, they're playing on a completely different planet than the average person.
And this chart just illustrates it perfectly. For a normal person with, say, a $1,000 account, a 1% gain is $10. It's barely worth the stress. But for a whale with a $30 million fund, that same 1% gain is $300,000. See? They're playing a game of capturing huge dollar amounts from tiny percentage moves, a game that's just not available to most people. Okay, so let's bring this all home. Just by breaking down a few of these key terms, you've already made the jump. You've gone from being an outsider, listening to what sounds like a foreign language, to being an insider who can actually see the logic and the strategy behind the conversation.
You have your decoder ring now. You get that long versus short is just a bet on up or down. You understand the insane power and the terrifying risk of leverage. You know that real-world news and just general market mood are what make prices move. And you have 3 core strategies straight from the streamers. Take quick profits, always use a stop loss, and never ever just copy the whales. So the next time you tune into one of those financial live streams, you're not just going to hear noise. You're going to hear signals. You'll hear strategies. You'll understand the sentiment. So the real question isn't whether you should trade, but now that you actually get the language, what are you going to listen for?